Hello all, welcome to ETF Edge, your go-to place for everything ETFs. Let's get right down to it. A stellar panel, as always. Our guest today, Dave Nadig, CIO and Director of Research at ETF Trends. Chris Hempstead from IndexIQ. And Simeon Hyman, he's the Global Investment Strategist over at ProShares. Gentlemen, welcome. Let's start with the poor showing of these transport ETFs today. I've been mentioning JETS. That's the International Airline ETF getting clobbered today. Dave, maybe you can weigh in on this. What has been interesting to me is not that they're getting clobbered. Obviously, Mr. Buffett said he was getting out is hurting them. But there's been a huge increase in the shares outstanding in this ETF in the last month and a half or so. Seems to me it's obviously because there are professional investors that are creating shares to essentially short them or to hedge with them. This is exactly what we saw with the oil ETFs a few weeks ago as well. Your thoughts on what's going on here, Dave?
Yeah, I'm a little skeptical that this is all create to lend. What we've seen is a pattern of consistent $20, $30 million flows day after day, which is really not consistent with a big rise in shares being shorted. We have seen that shares outstanding being shorted go up, but nowhere near as much as the money has come in. So in this case, I think what we're actually seeing is a lot of people trying to call the bottom. Remember, JETS is down something like 56% over the last 3 months. It's one of the only sectors of the market, one of the only ETFs affected that never caught a bounce. It's still trading very close to its March lows. So I think a lot of people are hoping that there's a government bailout, which is going to sort of act as the Fed put in this case. It's going to act as that buyer of last resort, because there's no question these are beleaguered and beaten up companies.
Yeah. Chris, I guess my only argument with that is that's what a lot of people said about the oil ETFs, that a lot of people were trying to play the bottom. Now, I know there's a difference here. We're dealing with equities in the case of the airline ETF, and with the oil ETF, we're dealing with oil futures, which is a different kind of phenomenon, obviously. But address this issue about professionals going in and playing in these ETFs for the purposes of shorting them or hedging with them, or retail investors coming in. In the case of JETS, do you have any sense of where the proportions are there? Chris, you there? I think we're having some problem. We're going to get Chris back in just a moment. Simeon, I don't know if you have any thoughts on this, but again, this is an eternal question for somebody like me that covers the ETF space. How much are these ETFs influenced by professional investors coming in and out versus retail investors? In the case of JETS, it seems to me like there would be more retail interest. So there is something that a point Dave has to make. But the creation of shares is so huge. It's about 20 times what it was 2 months ago, that you've got to think there's a little more here than just individual investors thinking, airlines are going to get bailed out.
Yeah, well, I think with respect to ETF structure, what we know is that the ETFs themselves create additional liquidity beyond the individual shares. So that's kind of a good thing from a market construction standpoint. The thing I would note also, just from a more of a market look perspective, is that we know in the downturn that correlations went sky high. But now what we're seeing is that dispersion that's telling who's going to be winners and who are going to be losers, and what's going to be a very idiosyncratic recovery, whether it's troubles for the airlines or the energy sector, benefits for more tech-oriented online retail, things like that. So we saw this coming out in the recovery in 2019 out of the more modest downturn in 2018, that dispersion went big, correlations dropped across the S&P 500. So I think we're starting to see that idiosyncratic risk start to show up as well.
Okay, I think we got Chris back, and I'm sorry, Chris, you dropped out there. I just wanted to get your thoughts on this. We were all just discussing the role of professional investors in ETFs, noting that in the case of JETS and the oil ETFs, the creation of new shares had gone through the roof in the last couple of months. We were talking about where the breakdown is between retail and professional investors. In the case of JETS, I'm talking specifically. Any thoughts on this? You see active trading all the time. What do you see here?
Yeah, look, there's a lot of attention on it, Bob, and I don't think I have anything too academic to add, other than the fact that a couple of things are in play when the price of an ETF or any security really, but oftentimes an ETF drops to a very low number or something along those lines, we see day traders, if you will, jump in and start to trade millions and millions of shares. If you look at what happened with USO, yeah, I understand that oil was a top headline, but I think part of that was also the ease of trading a lot of the security at a low price. It's almost like it almost seems like a gambling tactic at sometimes. So I think with the airlines being so beat up, and I think there's a lot of people out there, retail, and probably some strategic investors, obviously not Warren Buffett, who might think there's an opportunity to get in here and take a shot. I don't think, it would be my place to say that the airlines are out of the woods, but an ETF like Jets might give people that opportunity to go in, try to buy low, and ride a rebound.
Yeah.